Alright guys, so welcome to this video. So today I'm going to break down FOMC. FOMC is at 2 p.m. Eastern Standard Time today. So hopefully you find this video informative and helps you out with navigating through FOMC. So I'm going to start on this sheet that I wrote earlier just to kind of give a simplified version on how to handle FOMC, kind of a cheat sheet. So I'm going to quickly run through this and then I'll get to looking at some charts and show you how it actually impacts the charts itself and see if we can actually get some trades out of the impact of FOMC. So the first thing to note on this sheet is that this first line right here, the rate decision itself is actually not an area of contention. A lot of traders, I don't think, realize that, but it's highly probable that the rate decision will be unchanged at 5.5%. It almost always lands exactly at the forecast. I think for the last, I don't know how many meetings, it's just stayed exactly on forecast. So it's highly probable this remains unchanged. The key thing, however, is the tone of the Fed. That is going to be very important. So let me just get this out of the way. So that is going to be very important. The tone of the Fed is really a massive driver in the markets, right? So, and the way I see it is there's two scenarios. We either get a more hawkish Fed or a more dovish Fed. And whichever one it is basically the opposite impact of each other. And right now we're kind of in this pivotal point where we actually don't know, are we going to get the Fed a little bit more hawkish or a little bit more dovish? It's hard to tell. In previous meetings, we just knew that, things would remain pretty neutral, or before that we knew it was going to be very hawkish, and now we're kind of at this stage where it could kind of lean either way. And obviously the main thing is going to be the FOMC press conference at 2:30 p.m. Eastern Standard Time. So let me run you through scenario one, and that's a hawkish Fed tone. Now I personally believe this is the most likely scenario based off of my personal analysis. And the reason I believe that is because we've seen a lot of strong data come from the US. We've seen strong retail sales, strong PMI data, strong advanced GDP data. And in addition to this, we've also had CPI remaining pretty high at 3%, unable to get below 3%, continue its downtrend, and reach the Fed target of 2%. And you can see in this little chart that I put in here from investing.com, since July 2023, we've basically just stagnated around 3%. And we're stuck there. And we can't get down to that 2% target. And that's going to be, in my opinion, on the Fed's mind, because strong data plus inflation remaining kind of sticky at 3% means most likely we're going to see inflation tick up, because strong economy means inflation increasing. So the way I see it is the Fed isn't going to want to increase rates because they don't want to risk inflation ticking up and getting back into dangerous territory. So they're going to want to keep rates high at 5.5%, let the economy continue to cool off, and get inflation closer down to their target. And that's the way I see it. And if we do get this hawkish Fed tone today from the Fed, I think that's going to bring a lot of USD strength. It's going to bring some stock market weakness, and we're going to see pairs such as Euro USD go short. And that's what I'm going to look to do anyway. Now on the opposite end is the dovish scenario. And it is entirely possible that we get this scenario. I mean, this is just my personal analysis. It's entirely possible that we get a dovish Fed tone. And that's why it's important to see what the actual outcome is and then adapt accordingly. And not just pray that your idea is right. Act accordingly to the data. So if we get a dovish tone, which I see as unlikely but entirely possible, then we're going to see the complete opposite. We're going to see bearish US dollar, we're going to see stock market strength, gold buys, etc. And what we would look for here is some clear statements from the Fed that rate cuts are coming soon. in March, most likely. And if we hear comments such as that, then the dovish tone has been set. On the opposite end, with the hawkish tone, if we hear comments such as, oh, the economy is hot right now, we've got to be careful with inflation, that's a hawkish tone, right? The Fed is often very indirect with how they say it, but these are the things you got to pick up on. So anyways, how is this going to actually play out into the chart? So let's go look at some charts. So the first thing I'm going to look at is Dixie. So basically, if you look, this is the US dollar index, Dixie. So if you look at Dixie, we've been trending since the start of 2024. We've had this kind of uptrend, and recently in the past couple of weeks, we've kind of consolidated sideways and create this pretty big range right here. Now, the way I see it is this is anticipation for FOMC. This is uncertainty. So I see if we do get this hawkish tone, I think we're going to get a strong drive, retest continuations. And if we get that dovish tone from the Fed, we're going to see a strong break and continuations. That is the way I see it with the Dixie, right? And from that, then we can look at other things, how we're going to play it on other things. So let's have a look at Euro USD. So Euro USD, I think, is going to be an excellent play if we get a hawkish Fed tone. And I did a video yesterday breaking down Euro USD. And I think this will be a phenomenal play if we get the hawkish tone. And the reason being is because the Eurozone is in a position where I believe they have to start dropping their rates. And the reason they have to start dropping their rates is because the economy is just in a very tricky situation. No good data. Everything is just, slowing down. It's real recessionary data. And therefore, they need to drop those rates. And obviously, if we get a hawkish Fed, Euro looking really on the verge of dropping rates, we're going to see very, very bearish Euro USD. So if we do get that hawkish Fed tone, I'm going to be looking to short Euro USD. Now this for me is a key high, and obviously this is a pretty key low. So if we get that hawkish tone, obviously you could have taken risky sells from like in and around these areas, like maybe put a small position in. I've thought about it, but I'm going to wait for FOMC data to actually come out. And if we get that hawkish tone, I'm expecting this, and continuations. And I think this in here, this area right, where's this thing? Oh, here it is. This area right here is going to be where you're going to want to get your entries. And we can continue down, I think, pretty far. Let's look at the daily. Yeah, we can probably continue down to like at least around these areas, down to these lows. That's the way I see it. Now, that is all dependent on a hawkish scenario, and also depends on the level of the hawkishness or dovishness. It's not as simple as it's completely hawkish or completely dovish. It's normally there's a little bit of mixed signals, but you have to interpret it, as it is, and kind of just piece together what was it kind of leaning more towards. So if we get a slightly hawkish tone, obviously I don't think we're going to go crazy low. But if we get a very hawkish tone, then bang, you can expect really some Euro USD weakness. And on the opposite end, if we do get a dovish tone from the Fed, I'm personally going to stay away from Euro USD. Reason being is because if we get a dovish tone, that is going to mean that, in my opinion, we've got pretty weak Euro, weak USD. We're probably going to see some sideways action, probably some uptrending. But I would rather just play the bears on Euro USD for the moment until we have a major shift in trend. And then I'll just look at one more thing. I'll look at gold. So gold, I don't know why it's on this ticker, but anyways, gold for me, again, if we get that dovish scenario, going to be very, very, very bullish. If we get the hawkish scenario, it's going to be bearish, but I'm not going to look to take any sells on gold. And the reason is because to me, there's just too much political stuff going on. too many things that can, make gold go on a really strong run out of nowhere. So for that reason, I'm personally not going to be playing any swing trades on gold. But so that is basically it for this video. The key thing for me is going to be Euro USD, looking for that hawkish scenario. So let's see how things play out. It's going to be interesting. It's going to be a very pivotal moment. So pay attention, and hopefully we can catch some trades off the back end of this FOMC. Let's see what happens. All right, good luck today, guys.